Assalamualaikum and hi. Today we are from group 4. Today we are going to discuss about our group assignment for part B. So I introduce myself first. I'm Murfiqah, Alya,
Hi,
and I'm going.
I'm Amalin, Zakira, binti Kamalzul, Anuar.
And I am Nurul Ain binti Hasadian. No. And I am Nurul Ain binti Hasadian.
Next, Damia.
Okay, so I start with the question. Other information erroneously omitted surfaced after completing the financial statement in Part A, which requires the passing of adjusting entries. Explain the impact of the omission under reference on the element of the accounting equation of net enterprise, especially the net income. So we have to uh, ex- uh, we have to explain why the question. So basically this topic or this session will involve three three things, which is overstated, understated, and no effect.
First of all, can I know what is overstated?
Overstated is wait. Overstated is if an account or a figure on an account is overstated, the amount that is reported on the financial statement will be more than it should be. Okay.
Thank you.
Sorry for interrupt. May I know for understated, what you mean by understated?
So, understated is account or a figure on an account is understated means that the amount that is reported on the financial statement is less than it should be. Do you understand?
Okay, thank you.
So we proceed with the question, which is A, depreciation of office equipment and delivery van for the sum of 35,000. So as we can see, eh, this depreciation of office equipment delivery van is overstated. Uh, is is overstated in asset and no effect in liability, and i- net income will be overstated 35,000. Then accumulate depreciation office equipment and delivery van will be understated 35,000.
Okay, so I'm continuing with question B, which is unpaid salaries of 20,000 ringgit. Okay, for this question, account that have involved is unpaid salaries and salaries payable. So, for impact on asset, this account have no effect. Next, for liability, this account is understated, which is 20,000 ringgit. For net income, is overstated, which is 20,000 ringgit. For equity is overstated, which is 20,000 ringgit. So amount will be understated, 20,000 ringgit for unpaid salaries. For salaries payable is understated, 20,000 ringgit. Okay, so next for question C.
Okay, so for C, the available balance of office supplies in hand was RM300. So first thing, we need to minus from the question from part A, that is for RM4,000 for office supplies, and minus with 300, and we get 3,700. So for impact on asset, the available balance office supplies, it will overstated. Same as well for office supplies expense. For impact on liability, expense is understated. Then impact on net income. Overstated RM 3,700 and impact on equity. Overstated RM 3,700 for amount. Lastly, for available balance of office supplies, it will it will be overstated in 3,700, and for office supplies expense, it will be understated in 3,700. Okay, next.
Next for question D, Damia.
For question B, a total of 7,800 of the unearned revenue was released. So, the impact on unearned revenue for the asset, it will have no effect. Next, the impact on liability is overstated 7,800 and impact on net income is understated 7,800 while impact on equity understated RM 7,800. Additional effect on equity. Next,
Okay, for E, a sum of 40,500 insurance has already expired. So, in the answer will be the insurance expense overstated 40,500 in asset and no effect in liability. And net income will be overstated 40,500 and in the equity there's will be no effect. The amount will be understated, and for prepaid insurance will be overstated 40,500. Before that, I would like to add up something for you more understand about this answer. If
Okay.
the question said overstated, then we have to increase the value. If the understated, so we have to decrease the value.
So that's mean
Understand?
overstated increase, understated decrease.
Yep. Then in this question, so for example, insurance expense overstated in asset 40,500, right? So we have to increase. We have to increase the value 40,500.
So that's all. Okay, for the question F, the billing department forgot to send invoices to a customer for a total sum of 24,400, which is account that involved is account receivable and sales revenue. Okay, let's see for impact on asset. For account receivable, understated 24,000 ringgit of 100. For liability, which is no effect, net income is understated 24,000 ringgit 400. For equity is understated 24,000 ringgit 400. Okay, so amount for account receivable is understated 24,000 ringgit 400. For sale revenue is understated 24,000 ringgit 400. Okay, next. For question Z, Ain.
Okay, for G, interest revenue of RM 15,800 was not recorded. So it was not recorded, so it will be interest receivable. Okay, so for impact on asset, interest revenue and interest receivable, it will be understated RM 15,800, and for liability, understated, and same as well net income, understated, and then equity also understated, and for the amount, it will be understated. Interest both is same, so both will be RM 50,800. Okay, next.
Damia.
suppliers invest amounting to 155,000 to publish. So, for the asset, has not effect on liability, it is overstated 18,000. Make income has not met, so also not inside. So the amount is overstated 18,000.
Okay. So for now, you guys can understand, right? What means overstated and understated. You guys can understand?
Yes,
Yes.
can understand that.
Okay.
It's very
Uh, so any of you want to add on something, or we already done for this part?
I think I would like to discuss with you guys about question H, which is the account are not we are not doing the account in double entry. Do you guys understand? Because the usually will be two entry,
Yeah.
but the last question for H just have for account payable.
Yes.
Uh,
So
so why?
you
Can I know why?
anyone know why?
I think
I think
it is because they put misplaced for the invoice. So they're only available for one account.
So any of you want to add on something to explain more?
I think I'm done.
Okay. So if you are done, so that's all from us. Thank you.
Thank you.
Thank you.